Now, the Managing Director of Cohen Handler is Simon Cohen, and he joins us now to explain a bit more about this. G'day, Simon.
G'day, guys. How are you?
Fine, thanks, mate. Now, firstly, I have to ask you, and some people wouldn't be familiar with this, what does a buyer's agent do?
A buyer's agent, I guess, works exclusively for buyers who are looking to source property and negotiate the lowest price for them.
Simon, great to have you on the program. In terms of your business, Cohen Handler, I wanted you to give us a little bit of an insight. I know you deal with owner-occupiers and investors, but when it comes to investors, the current investor appetite, what are you seeing from the clients that you speak to?
We're seeing a lot of investors move outside of, I guess, known areas into areas that are more affordable and also have opportunity for more growth. I mean, we have offices all over the country, but in our offices in the western suburbs in Brisbane, for example, we're seeing a huge amount of growth in investor purchasing because it's more affordable. There's more drivers, I guess, for capital growth long term, and people are finding stronger yields. So it's not necessarily the blue chip areas that people are sticking to.
That's very interesting, Bill, because you and I have been talking over the past few weeks about those pockets that Simon's talking about, looking outside the conventional markets that most people have stuck to because they've moved. And so in terms of growth, Simon, when it comes to the affluent eastern suburbs market and the lower North Shore, I know you know that market like the back of your hand. You know it very, very well. And I wanted to touch on that because you don't necessarily hear that in the mainstream media these days. And I think that's a great guide, not just to where the investment market's going, but where the overall economy is going, knowing what's happening in those markets. What are you seeing in the eastern suburbs or the lower North Shore of Sydney?
The very blue chip areas like the east and north are so tightly held at the moment, and there's so much demand and probably the lowest supply I've seen in a long, long time. So things that are coming on the market in owner-occupier stock, we're seeing a huge amount of competition and prices being really driven up far more than even the owner's expectations. And that's why a lot of off-market and pre-market deals are getting done. As far as investors go, you know, they're finding it a little bit more difficult because when the competition does arise, obviously in investments very much yield and numbers driven, and the higher the price, the less desirable that opportunity looks. So that, again, that's why they're tending to look, you know, in those other areas.
So what you mean is, of course, if you're an owner buyer and you're looking for a home, perhaps on the north, if you're looking over $2 million, it's a dream home for a lot of people. There's a lot more emotion involved in that decision. Is that right?
Far more emotion, and you think to yourself, well, if it's an extra $100,000 or $200,000 over the next 20 years, maybe it's worth it. But if it's an investment, you know, emotion really has to stay out of it and needs to come down to the numbers.
So I was actually going to ask you what type of investors are buying these $2 million plus properties, but let's just talk more generally. What type of owner-occupiers and investors? I think sometimes it's unfortunate that in the press there's a little bit of exaggeration, I find, with one particular type of international investor. And so I want to ask you, Simon, who's buying? Is it a concentration of one foreign nation, or is it a little bit more widespread?
You know, I completely agree with you. There is such hype about this particular type of foreign investor. However, you know, I'm at auctions every week. We sponsor them. We get the numbers. We see who's buying. And it really has slowed down as far as overseas investors go. And it's becoming far more localized. It is people who are trading up, who potentially got, you know, strong offers on the property they're in, and they're seeing that gap a bit smaller. So it is, in my opinion, far more local buyers out there than these international buyers that we continue to read about.
That's really interesting, Bill, because that just confirms what I've been thinking, and it's great to hear that validated from somebody like Simon that's been in the market for such a very long period of time, is there, you know, every single day. And we are a strong economy. You know, things are improving. New South Wales is the premier state. It's very, very strong. And a lot of wealth has been created from this real estate boom that we've experienced. When it comes to bank lending, Simon, Bill and I have been talking about it. We just spoke about how some of the banks are about to become a little bit more aggressive. What impact does that have in that price range, the $2 million plus price range? Is it as prominent or maybe a little bit less because there's a bit more equity? How do you see that?
I see it. I think it's a little less, as you say. I think if you're buying a property $2 million plus, you really do have to have a substantial deposit. You do have to have a pretty strong income, and you would assume you're a fairly solid candidate for the bank to lend to. We are seeing certain banks tightening up, but the reality is we're in a highly competitive marketplace for mortgage brokers and banks and lending, that there are so many opportunities out there, and interest rates are so low that, I think it does make it fairly easy for people, unless, they don't have incomes that they can prove, or they've had problems in the past.
It's an interesting balance, Simon, when you get to that kind of money and a lot of it's borrowed. You've got this interesting balance between in the relationship where it is a higher risk, obviously, at that level of borrowing. But at the same time, as you say, if the people have the credentials and they're not in a position to repay the loan super fast, then the bank's going to make a lot of money out of that. So it's a nice little balancing act there between the two parties involved, or the three in your case, because if you're the agent.
Absolutely. I mean, the interesting thing is you buy a property for $2 million. You'd assume you're going to put down 20%. There's $400,000. If you can't afford to pay it back, the market really has to tank very quickly for the bank to not be able to sell that for $1.6 million. So it does seem very low risk. Yet, you look at people who bought 12 months ago and 24 months ago for $2 million, their properties have gone up dramatically.
That's right. Simon, we're going to put you on a spot. Last question, your outlook for the market, particularly the Sydney market, call it the $2 million plus market for the rest of 2016.
Guys, I think going back to sort of what I was touching on before, which is so little stock and so many people out there looking to buy this type of property, that two major things would have to happen. One, an influx of properties come on the market, and two, interest rates really having to rise to shake people up a bit, and I don't see that happening in the rest of 2016. So I think it's going to remain a highly competitive marketplace, and I do think it's going to stay very difficult to buy property unless you really know where to look and what to look for.
But sub $1 million will still be pretty hot?
Sub $1 million is always going to be hot. It's entry-level property. It's still a lot of money, but entry-level property, it's first home buyers, it's investors, it's downsizers. So there'll always be competition.
Simon Cohen, Managing Director of Cohen Handler, thanks very much for your insight, mate. Appreciate it.
Thanks, Simon.
Absolute pleasure, Jens. Thank you.